Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, November the 16th. The year's 2022. Let's talk trading. Trading without a system is erratic, part 2 with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, we just had some news come out a couple of minutes ago, and it looks like the market is definitely reacting.
It certainly has. It's dropped. Well, it dropped to I don't know how many pips on the initiation of the news of what?
About 30 some
20,
pips.
30, 40.
Yeah.
So just short of 40 pips. Wow. And then it reacted the other way. That's why I don't like trading the news. I say it over and over again because, I know you can make money on it. I know people who do make money on it, but it's not me. I just rather wait for I think in a text message we were texting back and forth yesterday, and you told me where prices hit, and I said, well, the market's a roller coaster.
Yeah.
And that's a roller coaster I don't like to go and be on, that. I like that. Bring me to an amusement park. I love going on roller coasters, but when it's my money on the line, those are roller coasters I don't like being on.
Right.
But just so the folks out there know, what came out was the core retail sales for the U.S. and they came in just short of triple of what they were expecting in terms of retail sales in the U.S. on the core side, and then on the overall side, then it was just only up a little bit. So when you increased, when you included rather food and fuel and things like that, it was almost triple. And that's probably just an increase because of the inflationary status of food and oil prices over the last month where they've gone up. But it still affects the actual total number of dollars. And you'd say, well, why would that force the market down? And the reality is that the Fed's going to look at that. All the consumers are still spending. We need to go and hike the interest rates even more. And therefore, the dollar becomes more positively viewed for people holding large sums of cash.
Right.
But, what do you say, Kiro, in terms of trading the news? How I know you do it from time to time. How do you do it?
Well, how I do it usually, it's more of just going off of what I see on the charts. And usually they like to lie to you before the news. And what I mean by that is if you look right before the news, they were running the price up. And then the news came out and it dropped like a rock. But a lot of times, like when I have my NFP chart up, I like to just play the previous day high-low, today's open, basically looking at the wick zone type trades, because if price gets in the wick zone, it usually comes back out. Now today, I'm not sure that happened on the news. Let me see which chart I'll have.
Yeah, we're still in the wick zone as of right now.
Yeah, we are. So it didn't. Well, yesterday's wick zone was so huge. I mean, it was 160 some pips. So that's just an incredible wick zone. But what it did cross was the previous midpoint of yesterday at 1884. So it's right back there right now, getting ready to cross it again. So I try to, not do anything too crazy. And I have learned you've got to be careful on what I call that second candle after the news, because a lot of times it'll do a continuation of what the first candle does. In this particular case, I'm looking at your 1 minute chart, but I have the fib lines drawn. So it went all the way down, put in a new 3-ball, and basically retraced that to the 61% line, came all the way back down, and got below the 10% line, because I added the 10% just because. and then it came all the way back up and across the 38% line, which it is right now.
Right.
So yeah, so trading the news, I just keep it real simple using lines drawn from the previous day. Open, high, low, close, previous mid.
So basically, what you're saying to us is that you trade the news the way you would trade anything else. It's just that it may happen a whole lot quicker. You're just trading horizontal lines that you put out there because they're lines for whatever reason the market is determined to be important, for lack of a better term. And so when it crosses that line, you're taking a trade and just being very quick on your feet, I guess, or quick on your finger.
Yeah, that's one thing you get. It's really like playing a video game. I mean, you got to be happy with 4 or 5 pips. It's like because it could snap back so quick on you. So it's nice if you catch that big ride. But even then, you don't know
Right.
what it's going to do.
Right. Right now, we've got a flip-flop trade setting up, and we got a third dot. Normally, I'd like to go and take this trade, but because of the news being so close to the news and the way it's been going back and forth, I probably wouldn't take, not probably, but I will not take this trade for a number of reasons. One, because of the news and how we've gone back and forth, and I don't think the market's really made a determination what it's going to go and do yet. The second reason why is if you look at the candle 0 on the 1 minute chart, actually now candle 1, 2, and 3, if you notice that we're in a point of compression here. In other words, we got higher lows and lower highs. And so, it's just sort of like the market's compressing. So I would not feel comfortable taking a flip-flop box trade at this point in time, even though we got all of those, aqua dots. And I know it's going to explode. The problem is, again, because of the way the market's moving, it could explode, and I can get in and sit there and say, hey, look, I got 5 pips, and go cash out, and next thing you know, I took a -5. It's just, I just don't feel comfortable at this point. And I think that's important for traders to hear that. And the reason why is because just because you get the signal, you got to go and pay attention to what's going on around you, and if it's sort of, it's sort of like crossing the street, as a pedestrian, even though you may have the green light, it doesn't mean you just walk out into the street, because you got to look to see if there's a truck coming down the road a little bit, and to me that looks like a truck. So I'm sort of like, I'm just going to go and wait for that traffic to pass, and I'll just wait for a little bit of time and wait for the market to calm down a little bit. Or I may say, you know what, if it's the type of thing where I'm starting to see a lot of that for a day, sometimes the best part of dialer is just to say, I'm not trading today.
Or you just wait till things change. But yeah, I think you're going across the street on the signal analogy is definitely appropriate. Just because you get the signal doesn't mean you take the trade. Now, there is a caveat, I think, or something else is that you could also filter out winners, and you have to be careful. So the question is, if you're going to filter, as you like to say, you need to put a system around the filter too.
Exactly. I mean, like, what would have happened was, I would have actually walked away from not taking, like, I potentially could have made 5 pips on this trade, but I just don't feel comfortable. And and you gotta know yourself as well, because are you not feeling comfortable because there's some type of emotional reason for not feeling comfortable, or are you not feeling comfortable because of stuff that you're seeing on the chart? And there's a difference between the two, because I have been reading a lot of history lately. I think, Hero, I'm a history type person, and I've been reading about how the phrase, there's nothing to fear but fear itself. When FDR gave that famous speech, during the Depression, and the thing is, are we fearing to get into the trade because of a rational reason, or are we fearing because of an irrational reason. And the irrational reason may be just I'm afraid to push the button, or click the button, or and whereas a rational reason would be I'm looking out there and I'm starting to see traffic out there that can wipe me out. I'm just not going to go and take that trade, as opposed to you're looking at as opportunity out there, and you need to know where you sit on that fear spectrum. Are you the type of person that's extremely spontaneous and will just go and just do it just because you're spontaneous, or are you the type of person that sometimes gets bound up, and just can't go and take the trade? Or, and then there's very few of us that are like this, that are, you look at it very rationally and say, okay, I'm going to look at it completely objectively. And that's what you're getting at, putting a system around things. Because for me, I'm not that way. There are very few people who are. But what you can do is you can certainly put things around, what you're doing, and putting up rules of things that you follow and that allow you to make those decisions for you. And you're not making the decision on the fly. No, you're letting the system make the decision for you because you put in the work ahead of time.
Yeah. Now, the other thing about that trade, since you trade with a stop loss, had you taken that trade, it would have been profitable. But now, on the other hand, we had the third, we had the change of dots where we had an aqua, then followed by two magentas pointing short. But the thing is, I wouldn't have taken that trade because if you look to the left, there's this two ball there. So price is already launched from this area once before.
Right.
And so that would have been my signal override. And if anything, I would have just taken the turn trade here because we had a bear candle followed by a bull candle, and we had the magenta aqua, and I would have gone long on right there at the flip-flop box high. And just so the traders know, flip-flop means when the candles change colors, you've got a bear candle to a bull candle, and Walmal likes to use the high and low of the flop candle. So this is flip to flop. And so, see, this trade right now would be worth over 8 pips, though I would have probably been out somewhere around 3 to 5 just because.
Yeah. I normally wait for that third dot, which we haven't gotten yet. But if I had taken after the first dot, which I take from time to time, I would have gotten out right at probably the 00, the 1.19. One reason why I may have taken that trade is because you're coming up, you had a nice little igniting candle. If you look to the left of that, the couple candles back, you could have picked up 2 pips, a little bit more than 2 pips because of the tops of those candles. So there was a high probability that it was going to get back up to that level. That 00 acts as a magnet. It likes to pull people up there or pull the price up there. So there was a reason to do it. But I probably, as soon as it hit the 00, I probably would have exited out of trade. I probably would have even set a TP right at that 00 just so I wouldn't miss getting out, because generally speaking, look what it just did. It goes up there, and it got up to almost 95 on my chart, and then turned around and came right on back down. And if all it takes is for you to go and look away for a few seconds.
A split second.
Yeah. All it takes is somebody to walk into your room, while you're trading, and divert your attention for a second or two. And the next thing you know, it's like, oh, shoot, I could have been up 5 pips, but now I'm break even or worse.
Yeah. That's for true. And guess what? The fastest 15 minutes in trading is just about over. It's amazing how quick this goes. The one thing about the flip-flop boxes, I've noticed, one of the things I like to do on it is I'll have the flip-flop box indicator set for 1 minute, but what I'll do is I'll look at the 5-minute candle color, and if the 5-minute is green at the high, and it hasn't extended its range too far, I'll take that trade. So, fellow traders, it doesn't really matter if you're trading news or not. because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.